Good morning. It's Thursday, November 14th, about 6 a.m. Central Time. Overnight, the precious metals, they continue to crash as bargain hunters did emerge at one point yesterday. However, it was overshadowed by the Trump trade taking center stage here. So we saw a higher dollar index. We also saw the treasury yields continue to ratchet higher. So looking at the overnight price action, it's important to note the distance between the high and low. So if you look at the December gold market, 25.4150 being the low, 25.85.80 being the high, seemingly closing on the low yesterday, and then the continuation of the sell-off into the overnight session. You do have December gold sitting at 25.57, down $28. So looking at the silver market, again, closing on the low, continuing the sell-off. It did dip below the $30 level, and we're sitting at $30 right now. The low of the session, 29.75, high of the session, 30.51. Again, that was yesterday's close where it reopens at the 5 p.m. open. Now looking at the copper market, drifting lower down to $4, not necessarily a line of support, a small psychological level, yes. However, the market here is continuing to sell off here, so I'm not sure that $4 will hold as any kind of support level at the moment. Platinum futures down $5.40, trading at 938. Palladium futures at 920. We never saw that inversion yesterday, but we'll want to keep an eye and monitor the distance between palladium and platinum futures as any kind of sign of recovery. If you look at the palladium market, that sell-off has been just quite wicked. And then the gold-silver ratio is sitting at 85-1. So something to note is that the sell-off between gold and silver have been closely correlated as the ratio hasn't gotten too far out of line whatsoever and has been seamlessly anchored at 85-1. Looking at the crude oil futures, something to note on crude oil is that this $65 to $68 level, the market has found some complacency there and has not really seen an accelerated sell-off whatsoever. And that's even to say that geopolitical tensions have died down significantly. Oil futures, as far as production, seems to be rising, and then also demand seems to be stalling a bit. So there's complacency in that market at the moment. The S&P 500 and all the stock indices, a lot of people are calling for a top. We're going to have to see how that market responds here and continues to hold at these higher levels. So any kind of dip on US equities, we've seen the buyers emerge in and prop that market up. However, we're not seeing a continuation to the breakout to the upside. Now, Bitcoin futures anchored right around either side of 90,000. We are trading at the highs of the session in the overnight session with the November Bitcoin futures sitting right at about 92,000. So when will this sell-off end in the precious metals? And I'll tell you exactly when it's going to end to the T. So you have to really break this thing down, and you got to look at it here from an economic standpoint. So you got a few things that happen. You have, remember, 4 different economic regimes. You've got, and you might want to write this down. Your first one is when you have growth rising and inflation declining. That's where everything goes up. It's very rare. The last time we saw that was in Q3 of 2023. You have the second one, and we are not in these ones whatsoever. You have growth declining and inflation declining. What is that? That equates to deflation. That's what China has been battling. They seamlessly try and throw the kitchen sink at the market to try and get this thing going, to try and get inflation going up, to try and get growth going up and support their economy. That's why copper futures have really not seen any kind of rally whatsoever and have been seamlessly drifting lower for many months here now. So you get these periods where they throw the stimulus in there and they kind of boost the growth and they kind of boost inflation, and then the market rolls back over. So we are not in that particular play whatsoever in the United States, not in deflation and not in this accelerated growth with declining inflation regime. What we are in right now is a battle between 2 different economic cycles here. There is stagflation and there is also reflation. So stagflation, and this is when gold will bottom and things will start to rise again. It's when you get growth declining and you get inflation increasing. What happens at that point? The Fed becomes handcuffed. They can't do anything because they can't cut rates because they'll boost inflation, and they can't raise rates because they'll kill growth. They are handcuffed to the market. So you get weakening data, you get weakening labor data, you get weakening retail sales. That's why we monitor the economic data on this channel every single day in order to determine what economic regime we're in. Now, the final one, and this is what we're in right now, is reflation, because of the fact that we have Trump coming in as president. And what does he pledge? He pledges to cut taxes. He pledges to make America great again. So what you're seeing here is you're seeing growth go up. And then you're also seeing, because of the tariffs he wants to implement, you're going to see inflation go up. The Fed becomes hawkish at this point. The Fed stops cutting rates, which is what we were just doing, and the Fed considers raising rates. So that's what happens. So if you look at the markets, this is a chart that I drew just quite simply here for you. And this shows, seriously, this is the stagflation that we were in. This is election night. This is the repricing of the reflation trade for Trump coming in. Now, yesterday, now you have to think, these are daily charts. This is the intraday. We get the CPI data comes out. It's in line with the expectations. Expectations were actually for a bit of a hotter number. So the bargain hunters have to come into the market. The shorts have to cover, and they start to emerge. Well, what happens is this relief rally that we get wears off as the trade goes on, and the bigger picture, this bigger picture, weighs in on the short term yesterday's little relief rally. So what happens is you get the markets, they actually, now you'll say this is oversold, markets actually crash from oversold territory. So that's what we're starting to see right now. The market has to pull forward, the precious metals have to pull forward the maximum amount of damage that tariffs, a strengthening dollar, and everything else can do, and it will price itself into the market. Now, when I say I can tell you the exact point at which the market starts to rise again, the precious metals, well, that's when stagflation takes back over. When growth, all of a sudden, the policies that Trump implements and everything that they're doing starts to weigh in it and kill the growth of the market. Now you've got rising inflation again, and you've got the growth declining, and stagflation comes in, the bottom comes, and then we'll see how the market interprets that. Now the big wild card is how do market participants play? Do they rotate out of things like US equities and go back into the gold market? Does the Bitcoin euphoria wear off and they go back into the gold market? Do central banks start to buy again because gold futures are on sale, and because of the fact that we're in a trade war, they find it easier to park their foreign reserves into precious metals and gold? So those are a lot of things to unpack, and that's really what is going on right now. So my suggestion to people is to really weigh in and think about your position sizing, and have the predetermined risk on each trade that you're going to do, or you drastically undertrade the market. That's why a lot of people will only have one contract on or one micro contract on as opposed to many contracts on, because of the fact that they need to wait this out for the current economic cycle to change. So today we're going to see PPI, we're going to see the unemployment claims. You want to see PPI come in line with expectations, you want to see the unemployment claims come in higher than expected, and then you want to see Fed Chairman Powell here today continue a dovish narrative when he speaks later on this afternoon, and that'll help support and kind of slow down the sell-off in the precious metals markets. Now, yesterday, that CPI print coming in line with expectations drove the expectations for the interest rate cut at the December meeting from 56% to 80%, and that's where the markets went up. That's where gold and silver and everything rose to the high of the day. The problem is that it wore off quickly because we still got Trump to deal with over here, and these big tariffs and these big unknowns. So critical level of support, it's going to be tough to determine on these markets because of the fact that they already crashed. Realistically, on a refreshed range, 25.29 could be your next level of support on the gold market. Below that, it's going to be a big level, which is 2,500, and a lot of people are calling for 2,500. And when a lot of people call for that, sometimes it does happen. Just like 6,000 on the S&P, just like I believe 100,000 on Bitcoin will most likely happen, because of the fact that it becomes brainwash into people's head, and they believe it will go there, and they will attack it until it reaches that level. So a lot about economic regimes today on this thing. I really suggest that you write down those different 4 scenarios, literally pin them to the wall, and then you can look at these markets, you can look at the data that comes out and determine which does it fit. Are we continuing to trend into that regime? As we continue to trend into it, which assets continue to perform in the direction of that? And then that's how you build your model of what different trades to have. That's why people that are long Bitcoin, long US equities like the S&P 500, and long the gold market, well, 2 out of 3 of those assets are working in their favor, and that's why their accounts continue to slowly rise higher. People that have just one specific regime on, whether it's just long something like gold and silver, those people are having problems in their accounts because of the fact that there are just a one-trick pony on there, and they don't see that we're battling between 2 different regimes at the moment, and they need to be in one until the other one shifts. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.